Oh, baby, let's go! We're here to talk about Ford stock. Late night gang, hope you're up, ready to roll. So, you see reported earnings in the after hours up right around 4% due to that earnings, okay? This is good stuff. So, definitely a couple things that I want to lay out here before we look at it. One thing I certainly anticipated was higher than the analyst estimates, for sure. On a revenue standpoint, I wasn't sure quite about the EPS line, but the revenue standpoint, they were kind of lowballing it, and based off of the numbers they've given in terms of automobile sales, there's no surprise here that they were going to beat estimates. The question is by how much. And again, it's against a very weak quarter last year, so the comp numbers should be pretty significant. I think from my perspective, the only way this stock is up in after hours is because there's some mention of EV sales, most likely. I think that's pretty likely because that's kind of what people are tracking now with Ford. I mean, this is a stock, if you look in the last 5 years, there was no movement on this company until obviously, huge dip. And then we start talking about electric vehicles. We get the real deal, the Mach-E. The Mach-E is the real deal, the Ford Lightning, which, by the way, is going to be a smasher of a car. And since then, the recovery was significant from 2020, 26% up in the last year, but 100%. That's not Ford for you. That's not Ford stock for you. I mean, we're talking about a stock that was down 4 years straight, 23% total. I mean, good grief. Wild stuff. It's crazy what can happen if you get into an emerging industry. What's possible. So let's look at these earnings. So Ford here, non-GAAP EPS of 13 cents, beats by 9 cents, and a GAAP EPS of 14 cents is a beat by 5. Not an incredible amount of profitability, but I'm not shocked by that. It beats analyst estimates. I'm not too upset by that by any means. Obviously, one thing you need to consider with this company is it was very well known for a dividend. They no longer pay dividend, so that profitability needs to go into other places. My perspective is, if I'm them, I'm not necessarily boosting back up the dividend quite yet. I think this stock's kind of transformed from a traditional dividend stock to where they have a growth opportunity ahead of them. If they spend more on research and development to get ahead in the electric vehicle game, it could be huge for them and benefit shareholders in other ways. So that's my opinion in the matter. And from a revenue standpoint, $24.12 billion, up 45% year over year. Not a shocker. And a beat by $1.29 billion. Now, I didn't even think it would be that high of a number. Ford doesn't beat like that. Look, there's a thing. That's why the stock's been so stagnant prior to last year. This is an un-Ford-like quarter, and it's making me happy. Normally, they rarely beat like this, and it makes me a happy man, As a man who's got his shares in at $7, I'm happy. And a raise of the full year adjusted EBIT and adjusted free cash flow, respectively, between 9 to 10 billion and between 4 to 5 billion, respectively. Oh yeah, we're raising guidance too. Another great thing. They say the U.S. customer sold order bank exiting Q2 is more than 7 times what it was a year ago, and again, that's because of a weak quarter with new models to come. Sales spring-loaded for growth when semiconductor supplies normalize. Again, we're getting to a point in which we're getting there, but they've got a lot of demand, especially for the Bronco, the Mach-E. Pretty high demand, surprisingly, especially the Ford Lightning, which I think is going to be an incredible sales bringer for them. It's a great vehicle. Great vehicle. So let's take a look at the press release and see what we're able to find out. Net income line here, $561 million, obviously sticks out to me. One thing I always track is net income. Oh, there's quick links to the social media pages. Good job putting in hyperlinks. I'm proud of them. I'm proud of these people, man. Ford Investor Relations team, you're doing a good job. Raised the guidance, obviously, and then we saw that. Nothing crazy there, but I like to see that net income line. It's looking pretty good from a GAAP standpoint. One thing you need to consider, net income line looking good here. I mean, not quite what we saw last year, but it's not too bad. Revenue growth 38%, solid from a GAAP standpoint, and for the first half up 17%, not crazy, but we like seeing it. We like seeing it. Market share decreased just slightly, 0.8 percentage points. Not too bad. So some of the achievements, obviously the list here. The Mach-E already ranked number 2 in sales among all electric sports utility vehicles in the U.S. Just 7 months after shipments to customers began. Was named the Electric Vehicle of the Year by Car and Driver magazine. Now, I don't care anything about these awards. They do have a hyperlink here. What? Hyperlink? No. Never mind. Not so much hyperlinked. But I don't care about these awards by any means. Let's be clear with each other. These awards are paid for. They are fake. So same thing with JD Power, stuff like. They're paid awards. They're by independent companies, which are paid off. So not too scared. Electric Vehicle of the Year. That's like every single movie that comes out will claim they are the movie of the year, quote unquote, because they have one reviewer that said that, so they can say that. Here's the big news: the Ford Lightning has generated 120,000 reservations since their unveiling in May. About 3/4 of them are from customers who are new to Ford, and that's what I'm talking about here. So there's a traditional Ford base, which I think probably sticks with the Ford Lightning, or the normal Ford F-150. They've been reliable to that traditional ICE vehicle forever. This Ford Lightning now can bring new people to the brand who will want to see what this great, very well trusted truck brand is doing, but they can do it in an electric manner. It's a different audience, and that's what's nice about them, because they can bring new customers to the place, to the plate. That's what I really meant to say, but that's fine. The Maverick. Heard a lot of great things about the Maverick as well. An upcoming 5-passenger small pickup, which obviously is a great budget truck here. EPA estimated 40 miles per gallon here. Price starts at $20,000. Nice stuff. The Ford Pro, standalone commercial vehicle services and distributions business, adding seamless EV charging and energy management stations in June. They did just announce too that they're going to be placing their battery center in Michigan. Of course, it's in Michigan, the home of Ford, baby. What can I say? The Blue Oval Intelligence software stack, initiating over-the-air software updates to customer vehicles, with more than 95% of Mach-E owners opting in for the service, which is nice. It just obviously updates the vehicle with certain things, as it's entirely, it's entirely based off of cloud updates. It's fantastic. It's fantastic stuff to see that. So Ford, Argo AI, and Lyft have announced a collaboration that will deploy driverless vehicles on the Lyft network, which is pretty cool, starting later this year in Miami. Again, autonomous driving is huge, especially when you talk about a autonomous taxi network. It's pretty massive in what it's able to do, so I'm pretty intrigued by that. So we'll see what's to come. Big, obviously, opportunity in my opinion here is going to be market share in China. I think it's a great opportunity for them, and they need a great ability to really succeed there. I think they can make a lot of money in China, frankly, if they manage to nail down that market share a little bit more. North America, obviously, they do great. Number 1 selling truck in North America, not a shocker. That's really most of the highlights there. Later this year, Ford China will introduce a locally built version of the Mach-E. You like to see that. You like to see it. What can I say? The Mach-E, it's a huge thing. Again, it's not the prettiest car. A lot of people insult the appearance of the Mach-E. I get it. But come on now, guys. Electric vehicle for Ford, first one. I feel good about it. Let's look at the balance sheet, one we like to do. It's a massive balance sheet on this company. It really is. Total current assets sitting at $101 million. Don't want to get that mixed up. $101 billion. Let's be clear with each other. $101 billion compared to $116 billion. A decrease you saw mostly in the Ford credit finance receivables. That's the majority where you saw the decrease. Total assets in general at $248 compared to $267. So definitely a decrease. I'm assuming they paid down probably paid down debt to some extent if you're going to see that big of a decrease. Likely they're taking away some long-term debt. Look at the current liabilities here, sitting at 83.4 billion compared to 97 billion. So they did decrease short-term liabilities for sure in accounts payable, as well as other liabilities and deferred revenue. So good to see that, and Ford Credit as well. And you saw that translate into the asset segment as well. Total liabilities coming in at 213 compared to 236. Not bad, all things considered, by any means. Stockholder equity actually saw a rise. Definitely high on the liability standpoint. You can't deny it, but that's really because of this Ford Credit segment that you have to consider. So I'm not too shocked about that. Liability or stockholder equity really coming in at 34.7 compared to 30.8. Saw an increase over the last 6 months, which is what I like. Now, one thing I need to mention with the stock, it is historically cheap. This is a stock going to be trading at a P/E ratio right around 15 at a market cap of $54 billion. And it's a company that you can tell here, they put up $24 billion in one quarter. This is a company that's going to be putting up, last year put up $127 billion in revenue, as you can see right here. This year, I anticipate certainly higher than that, probably closer to $150 billion in revenue, just because of recovery, and is getting into the electric vehicle game. Are you kidding me? In the last 5 years, the stock's only up 10%. Market cap is historically cheap, trading at a third of what their sales are going to be. P/E ratio, historically cheap, trading at a 15 P/E ratio. When you're talking about, let's hear me out. We're talking about a company, brand new market, electric vehicles in the game. When other companies here, trading at P/E ratios over 100 that get in the electric vehicle game easily. Most of them aren't profitable, still trading at ridiculous valuations. Nowhere near this. Ford is the best deal in the market by all means. It's a fantastic value play, and because they're getting an electric vehicle game, I really feel good about the Ford Lightning, by the way. Ford Lightning is going to be incredible for them, but that's what I got for you, and I hope you enjoyed.